But what if I told you that today, most of the trading happening around the world isn't done by people at all? Over 70% of global trades are executed by algorithms, invisible systems that analyze, decide, and act faster than any human ever could. What once required teams of analysts and traders now happens in milliseconds, thanks to code. For centuries, investing was an exclusive game. If you wanted to buy stocks, you needed a broker, a middleman who charged high fees, filled out forms, and often made decisions based on emotion rather than data. You couldn't see real-time prices, you couldn't trade on your phone, and unless you had serious money, you were mostly locked out. Investing was slow, expensive, and for many, out of reach. But then, technology happened. The internet connected the markets. Powerful computers began crunching numbers that humans couldn't even begin to process. And soon, the old world of shouting traders and paper slips gave way to a new one. A digital ecosystem where information ruled and access was only a click away. It started quietly, with online brokerages in the early 2000s that let people trade from their computers. Then, mobile apps took over. Suddenly, you could buy a stock while sitting in a cafe or sell crypto while lying in bed. No phone calls, no paperwork, just tap, confirm, done. Artificial intelligence joined the movement. AI systems began scanning millions of data points every second, predicting trends, detecting risks, and recommending trades based on patterns no human could ever spot. Robo-advisors emerged, building portfolios automatically for everyday people. What used to take a financial planner days could now be done by an algorithm in minutes, customized, optimized, and available to anyone. Then came blockchain, a breakthrough that changed the very definition of trust. Instead of relying on banks and middlemen, blockchain allowed investors to trade and verify ownership directly, securely, and transparently. It opened the door to cryptocurrencies, NFTs, and decentralized finance, or DeFi, as the world now calls it. For the first time, financial power shifted from institutions to individuals. And then came a moment that proved the world would never be the same again. In 2021, millions of small investors, connected through social media and armed with mobile trading apps, decided to challenge Wall Street itself. They poured into stocks like GameStop and AMC, turning a few online posts into one of the most explosive market events in history. For the first time ever, technology gave regular people the ability to move the market together. It was chaotic, it was unpredictable, but it was revolutionary. Since then, investing has become something entirely new. AI-driven hedge funds trade in real time, 24 hours a day. Robo-advisors manage billions in assets for people who never speak to a broker. And with blockchain, investors can hold, lend, and borrow digital assets with no bank in sight. The gap between Wall Street and Main Street has never been smaller, and that's the true power of this tech revolution. Of course, technology brings challenges too. Algorithms can make mistakes. Crypto markets swing wildly, and when everything moves at lightning speed, risk can spread faster than ever before. But even with all its chaos, one thing is clear: there's no going back. We've entered a new era, an era where investing isn't reserved for the elite, but open to anyone with curiosity and a smartphone, where data, not intuition, drives decisions, and where wealth creation is no longer limited by geography, privilege, or access. The tech revolution didn't just change how we invest, it changed who gets to invest. And that might be the most powerful transformation of all. So, what do you think? Has technology made investing better or riskier? Share your thoughts in the comments, and if you're curious about what's next, check out my next video. If this helped, subscribe and like for more insights.